Hi, this is Zach Meir with the Bulletin board heroes here at Zach's Traders Cafe for Monday, the 16th of December. Starting off with the FTSE 100, which has broken that uptrend line that we drew yesterday. That was nominally at 82.80, so below that, the risk of a test of the 50-day moving average 82.30. Obviously, given that it's the festive season coming up and the year end, we're not expecting the market to go lower than the 50-day line, but there's always the 200-day moving average around 81.74 as a next stop on the downside. RSI still just about holding above the neutral 50 level, so we really need to turn here or have an end of day close back above 82.80 to feel more comfortable. If you are looking for a momentum trade on the year-end rally, then it would be an end of day close through 82.30, and that December resistance line is the top of that triangle that could then take us up to 8400 and beyond. Best case, obviously, 86.40 in the top of that channel from this time last year by the end of next month. Worst case is to be able to head to the floor of the channel around 80.90 before we rebound. Moving on to the DAX, and here it's a rather better, different and better situation, but even here we've backed off the record high levels through 20,500. We've got initial support here at the floor of the current flag around 20,200. Worst case at the moment is we'd have to test the floor of the gap there from the start of the month, just above 20,000. But still looking for a break of 20,500 to take us up to 20,800, maybe by the end of this month. Moving on to Bitcoin, and here you can see that it's all pretty good stuff in the sense that we're well above the 100,000 level. Recent support intraday is coming above 100,000, which is good news. And the longer we stay above 100,000, the greater the chance we move towards 120,000, which is the upper parallel of that April resistance line. There's a March resistance line projection, and that's what we're looking for, hoping for, by the end of next month. In terms of support, 98,000, the logical area, which was last week, and then maybe the worst case here would be a rug pull down to 95,000 again, which is the uptrend line from back in November. The other negative to note at the moment, or a negative to note, is the way that we had a higher all-time high yesterday, but we've had lower RSI trace, so that does suggest maybe a move just below 100,000 might be needed to clear the air. Moving on to the stocks, and starting off with Avacta, which has managed to dig itself out of a hole, bouncing off a very shallow uptrend line there from June around 42 pence, and the upside here currently up to the 50-day line at 51 pence. You can see in the recent past the 50-day line has been the top of the range, or in the last rally we couldn't even get up to that, so everything hinging on trying to get back up to that 50-day line and get through 50 pence. The other point to note is that we haven't had the RSI back above neutral 50 since the end of October, and really need to get that back above 50 versus 47 at the moment to give us the assurance that the rebound has legs, because on the last occasion we failed below neutral 50. Moving on to Audioboom, which seems to be going from strength to strength at the moment. Here we've managed to break last week's resistance. The intraday high last week was £3.77, and doing that on the first day of the week is always a good sign. We've been looking for up to 500 pence. 500 pounds a bit rich at the moment, but 500 pence maybe by the end of next month, while we remain on the right side of £3.50, which we have done so far today, the low £3.55, so looking impressive. Also impressive is the way that after the big spike that Cadogan had last week, we've seen the shares only retrace a third of the big up day and then head and break the high of the Friday. Current situation is that we're looking for up to the 6.5 pence level, while we're above the previous target there, the upper parallel of that triangle from July at 4.4 pence. So that looks as though that may be able to push on through. On to Gen IP, and here the situation is that we had an inkling that the shares were about to turn around. We had a sideways shuffle above a rising 50-day line, and that's come to pass today, just breaking the intraday high of last week as well. The initial target there was up to 35 pence, which hopefully we'll get in the next day or two, but the big picture target here is the upper parallel of that triangle from back in October as high as 49 pence, which could be hit by the end of next month. That's especially if we can stay above recent resistance rather, on the way down at 28 pence. You see also that the RSI has bounced above neutral 50, which is a leading indicator on the upside. I've covered GSTechnologies several times, and happy to say that the shares have just managed to hit my third target there, which was around the 2 pence level, or just below the 2 pence level. In fact, the high today, 1.97, which is basically where the line is. Next target up is a long-dated resistance line projection from back in July 21, 2.9 pence, and we're looking for that by the end of next month, while we remain above last month's resistance at 1.6 pence. Been a bit of a volatile ride in Optibiotix of late, but the shares consolidating well above the 200-day line at 18.5 pence, and the longer they stay above that, the greater the chance of a move to the top of the triangle there from this time last year as high as 32 pence by the end of next month. But we really need to stay above that 200-day line. Decent news today from Powerhouse Energy, and the shares gapping through a rising 200-day moving average. We already have the 50-day moving average rising, so that suggests we're in the run-up to a golden cross. The run-up to golden cross tends to be the strongest part of the cycle, and that suggests that we should be believing in the idea that the shares can hit 2 pence by the end of next month at the top of that rising trend channel from February, especially after the rebound for the RSI above neutral 50, which tends to be a leading indicator on the upside. So looking for 2 pence, while basically we're above the floor of the gap there at 1.1 pence. Prospex had a decent update today as well, and as it has done in the recent past, building on the recent golden cross that the shares have had, gapping to the upside, and level with November resistance on the first go of trying to break it. Looking for the shares to hit the top of that rising trend channel, basically the top of the range, at 9.5 pence by the end of next month, especially while they hold above the gap floor at just under 7 pence, that rising trend channel there from back in the summer of last year. Moving along to another situation which may have legs, which is Puretech Health, and here just trying to break out of or break above November resistance at £1.75. That we can stay above that on a weekly close basis, looking for as high as £2.28 by the end of next month, off the delivered by a rebound off the floor of the rising trend channel there from July, and a bear trap from below the 50-day moving average that we had at the end of last week. Quadrise keeps on rehabilitating itself and improving itself, and very decent update today as well, breaking above November resistance at 4.4 pence, and above that we're looking for the shares to hit a 2018 resistance line projection as high as 6.6 pence, maybe by the end of February, and ideally we stay on the right side of recent support there, 3.75 pence in the meantime. Roadside Real Estate's been one of the heroes of the year to date, and here I think you can see that the shares are up 380%. Rising trend channel here heading for as high as 38 pence, and we're looking for that by the end of next month, while we remain above the 50-day line at 28 pence. Saga is next, and maybe one could be dreaming of some M&A action here, but what is interesting is that we've broken above the initial December resistance there at £1.30. Above that, looking for the top of that broadening triangle there from this time last year, as high as £1.51 by the end of next month. What's interesting here is that we've had double bounces for the RSI above neutral 50, and we've got the 50 and 200-day lines both rising, so the next time they cross should be a golden cross. On to the last two. The first one is Sound Energy, who I interviewed last week, and a very buoyant interview it was. Here we're finding support at the 200-day line there at 0.85. Above that, still looking for the shares to get to 1.07 pence by the end of the next month, or even sooner, given the unfilled gap to the upside, which has been maintained since its big news. Finishing off with Sealand Capital, which is a bit of a lap of honour in the sense that we've been looking at this from well below the 0.5 pence level, The current situation is that we're at the third target and finding support there, just near 1.8 pence, about 1.8 pence, looking for ultimately an August resistance line projection as high as 3.3 pence, maybe as soon as the end of next month. That's it for me today. More updates tomorrow.